On May 6, 2010, the US stock market opened with large declines. However, as the day progressed, they remained bearish due to growing concern about the debt crisis in Greece. By 1400 hours and 42 minutes on that mythical day, the Dow Jones Index had accumulated a drop of more than 300 points. Shortly after that, the stock market began to plummet. Within 5 minutes, the market fell more than 600 points to a loss of close to 1,000 points. 20 minutes later, the market had recovered most of that 600-point drop. Yet, those crucial minutes allowed Navinder Sarao to amass a fortune from the shadows while the world panicked. Sarao had managed to fool the market with false orders, causing the stock market to lose $1 trillion in a heartbeat through aggressive and persistent tactics. These practices allowed him to deceive the market and make a profit of $40 million between 2009 and 2015. Sarao employed an automated computer algorithm to fake sell orders and simulated multiple trades, entering simultaneous orders in the same direction. During his trial, he admitted to making many trades, but tried to excuse himself by claiming that they were genuine. The ruse that shook the US economy was executed from a small room in London. From there, Sarao managed to carry out his plan. To do so, he used software adapted for remote trading on the Chicago Mercantile. He bought and sold contracts that speculated on the value of major US companies until their price plunged. But how did Sarao know this strategy would make him so much money? Navinder learned to invest in the stock market while playing in an arcade. After studying the market carefully, he managed a net worth of $1 million and traded in S&P 500 futures. Yet, despite his large profits, he never told anyone, not even his family, about how rich he was. He suspected that if he did, they would start treating him differently. While trading on the stock market, he found a flaw in that stock index to commit his scam. Every time someone placed a buy or sell order, the high-frequency traders would try to put their trades milliseconds before they could be executed. In this way, they became the first to make money from market swings. Navinder realized that all high-frequency traders use similar software to move the market in the same direction. But unlike the rest of the traders, he took this to a greater extreme, placing thousands of orders before canceling or changing them instantly. This practice is known under the name spoofing. Through spoofing, Sarao created an artificial demand for others to buy or determine those assets. Navinder began using NavTrader under a false identity to anticipate the trades of high-frequency traders. When he faked a trend, he made all the high-frequency traders move in the direction he wanted. That's why Sarao was not an avalanche. Instead, he was the rock that caused the avalanche. And now he was watching the disaster he had driven from thousands of miles away. According to the Commodity Futures Trading Commission, Sarao was significantly responsible for the sudden drop in the stock markets. But he was not solely responsible for the incident. For journalist John Bates, blaming Sarao for 100% of the entire stock market collapse would be like blaming lightning for starting a fire. Even if high-frequency traders were not directly responsible for the flash crash, they played a vital role in the brief collapse of the economy. In 2015, Sarao was arrested for his alleged involvement in the flash crash. Likewise, the Commodity Futures Trading Commission filed civil charges against Sarao. Nevertheless, the police found it hard to believe that the man responsible for the flash crash was sleeping with his parents, surrounded by stuffed animals and posters of Messi. After spending 4 months in Wandsworth prison, he was extradited to the United States. Navinder has Asperger's syndrome, an autism spectrum disorder that, according to his lawyers, caused him to view his intervention in the markets as if he was playing a video game, a game he was not willing to lose. Navinder's crimes gave him the name the Hound of Hounslow, a reference to the Wolf of Wall Street, Jordan Belfort. Even though both caused a significant scam in the markets, Navinder Sarao could not be more different than the Wolf of Wall Street. He didn't make flashy purchases or date models, and lost most of his money to fraudulent investors. In August 2015, he was released on £50,000 bail and a full extradition hearing scheduled with the U.S. Department of Justice. In 2016, Sarao agreed to pay the U.S. government $12.8 million, as prosecutors believed that had been the amount of money the Londoner had made from his scam. However, it is presumed he amassed close to $40 million. Navinder initially faced 22 charges, carrying a maximum sentence of 380 years. But after pleading guilty to 1 count of wire fraud and 1 count of spoofing, he somehow managed to reduce his sentence. Prosecutors decided not to sentence Navinder to prison because he could not spend his money on luxuries and lost much of his earnings in scams he was a victim of. In addition, they took into account his autism. However, were these the only reasons Sarao was not imprisoned behind bars? There are thousands of cases of swindlers who, like Sarao, managed to manipulate the market and make millions of dollars. Unfortunately, modern times have meant the stock market is dominated by algorithms and poorly regulated programs, which allows these scenarios to be possible. If companies continue to launch more unregulated algorithms, the consequences will be felt by small and medium-sized investors who cannot affect market trends. Many of these algorithms are used by organizations seeking to enrich themselves. Without strict control of these programs, similar scams may continue. Fortunately, the government was able to take advantage of Sarao's intellect and skills. By the time his prosecution began, Sarao had been the second person prosecuted for spoofing in the United States. Instead of sending him to prison, agents and prosecutors at the Department of Justice and the Futures Trading Commission decided to use Sarao to track down stock market manipulators. With his help, they developed a piece of software to identify irregular practices and teach how to analyze buy orders. Thanks to Sarao's actions, more than a dozen people have been arrested for market manipulation, and several firms have been sued. After collaborating with the government for some time, Navinder sought a way to be found guilty without being charged. However, Chicago Magistrate Judge Virginia Kendall felt Sarao could not walk away without a penalty. Even after cooperating with the UK and US justice systems, Sarao was sentenced to 1 year of house arrest in his parents' home, which wasn't so bad. After all, the guy was about to crash the world's economy, so he got off easier. It is believed that Sarao found a way not to run out of money after discovering that a large part of his earnings was sent to a tax haven on the tropical island of Nevis. If this is true, the algorithmic genius might not be bankrupt. The most surprising thing about Navinder Sarao's case is not his contribution to the collapse of the markets, but the motives that led him to commit his acts. Think about it for a moment. Sarao got millions of dollars, but didn't have significant expenses for years. He didn't tell his parents or friends about his exploits. So why did he do what he did? As determined by the US courts, Navinder's actions were not driven by greed. Therefore, it would not be unreasonable to say that Sarao truly viewed the stock market as a game. But how true is this theory? Sarao's only worthwhile expenditure was a second-hand car, but after that purchase, he kept a low profile during the years he ran his fraud. Even if the flash crash took place in 2010, he kept using his algorithm until 2015. So you can get an idea of how much experience he acquired in the market. With all the money he made, Sarao could have left the country, opened a business, or traded on the stock exchange legally. Nevertheless, he preferred to continue to carry out his plan until he was arrested. Even after becoming a millionaire, he never considered leaving his parents' home. Was it a lack of ambition, or could it be that he really loved the adrenaline he got from defying the law? Maybe it was the only thing Sarao was good at, or perhaps he really did see it all as a game. Only Navinder Sarao, the genius who put the US economy in check, knows the answer. That's all for today. If you liked the video, subscribe to our channel and activate the notification bell to enjoy the next story we have prepared for you, trader. Thanks for watching. See you soon.